Thank you all so much for joining us again. We have with us Mr. Sean Norris as well as Mr. George Hilliard. So if you could please, I would like to explain, if you could, your company, what you do, and how what you do can benefit small businesses.
I'm George Hilliard. First of all, I want to thank you, Tamara and Mitchell Like Gas and Water, for involving me. I'm with Pete Mitchell and Associates Insurance Agency. We are a 46-year-old agency. We just recently lost our founder, Pete Mitchell, about 2 weeks ago. 2 weeks ago today. We are a certified local and minority vendor. Some of our clients are Mitchell Like Gas and Water. Thank you. Shelby County Government, Memphis Shelby County Airport, the City of Memphis, etc. One of the things that we offer here at Pete Mitchell Associates, other than insurance and bonding, we offer our education, which we are actually participating in a event now. Next door, one of my associates working with the Memphis Minority Contractors Association about bonding and insurance. What we provide is not only insurance products, but also guidance. And when it comes to bonding and insurance, we recognize that in order for a person to really, I guess, benefit or really appreciate having these particular items in place, that's a benefit because you get an opportunity, as like today, to be able to participate. You could be able to actually be in the playing field. So one of the things that we focus on is getting you to recognize that there's a process when it comes to bonding. I'm mainly focusing on bonding today. You need to understand the purpose and the benefit, and there's some other things that I've just briefly mentioned as for the sake of time. When it comes to, we recognize that one of the biggest barriers that business owners say they face, especially minority business, is bonding. One of my missions, we've been doing this for years, is to try to ease I guess, the frustration by providing information. When you start talking about bonding, you need to understand, I'm saying, it's good to understand the purpose and the functionality of a bond. And it won't be as frightening to you as I walk through this today very briefly. First of all, in order to participate especially as a prime contractor, and sometimes subcontractors, as subcontractors, you're required to have bonding. If you are pursuing a contract with the city, the county, or the state or federal government, if the contract is more than $100,000, it's mandated. It's mandated. They cannot get around that. So that's mandated. And in the state of Tennessee, the Tennessee Miller Act requires that they mandate this. So that's one thing we need to understand, that it's mandated if it's over $100,000. And the benefit is, we need to understand the benefits of surety bonding. What it does is protect the owner, whether it's Memphis Like Gas and Water, whether you're dealing with a private company or whatever, but it's protect them in case you default or you fail to complete the things that's in the contract. And also it helps you because it gives you an opportunity to really participate. I pretty much can assure you, if you have been pre-qualified or you have a bonding capacity, your opportunity is going to come. It's going to come because that's what people are looking for. Some people that are bonded. So as I say to you, that's a benefit. Don't see it as just something to acquire, but it's a benefit to you. So we have to understand the process. You need to really be able to, I think, advantage of this, need to be pre-qualified. There's one thing about bonding, you can get pre-qualified, but you don't have to pay anything. So the pre-qualification process is just like going to the bank. With Sean to talk about that probably later. If you have to look at bonding as more of a financial tool versus insurance, because the bonding company look for the same thing that the banker will look for. We call the 3 C's: your character, capacity, and capital. I mean, by character, do you pay your bills? How's your credit capacity? Do you have the resources? Do you have the manpower or the late woman power to perform? Or do you have the particular equipment that you need to do the job? In the capital, your cash, collateral, and all those kind of things. Those three C's. So understand the purpose of that. And lastly, in reference to as you pursue bonding, think about it is that it's not something you do when you pretty much need it at that point. If you are responding to an RFP or an RFQ and all of a sudden you realize there's a bonding requirement, a lot of times you're not going to be able to take advantage of that because it's a process unless you already been bonded and you already have that's in place. We at Pete Mitchell and Associates, we have the expertise. We've been around for 46 years. And what we do when someone comes to us, and we like for them to come before they need the bond, to get pre-qualified. So what we would do an evaluation. We'd sit down and see where you are, how are you structured. We'll talk to you about your credit. I mean, all this is confidential. And once we see that where you are, we provide advice so you can start working toward being bonded. That is so key. That's something that we really need to be focusing on, being proactive. And at that point, if we see that you are ready, we'll submit it. You can create a startup, you can be a business for a long, long time. But it all boils back to those three C's. And we try to get you to be where you need to be in that process. So that's where I want to start. But you can reach us at Pete Mitchell and Associates, 901-345-6176, and we are here on Mia Branch in Whitehaven, 426 Mia Branch. Thank you, Tamara.
Thank you so much, Mr. Sean. Can you share briefly the benefits that you offer to small businesses, as well as how can small companies work with local banks to create the capital sources that they'll need to have the working capital for meeting the requirements? I know Mr. George hit on that as well, but if you could also briefly mention from your standpoint.
Yeah. If you look at the agenda, initially when I accepted the opportunity to be here for the MLGW Procurement Conference, and thank you for having me, Tamara, I was with TKS Capital Advisors. And what TKS was and is a corporate financial intermediary firm that specialized in acting as an intermediary for major banks, regional banks, to small and mid-sized businesses. And we also had a group of guys who did startup lending. And that was in various forms, SBA, FinTech, direct lending through a fund that we control, a proprietary lending platform. Last week, I left TKS Capital to join SunTrust Bank, which is now Truist, as a commercial banker in the Memphis Mid-South commercial banking region. And those businesses that I'll be dealing with are going to be more established at $2 million to $100 million in sales, more like 125, 150 million in sales. So that's going to be larger. But with my background, I'm able to and willing to talk to anyone. I was at TKS Capital. I'm on the board of River City Capital, which is a CDFI. I was briefly at Pathway Lending. I was at First Tennessee Commercial Banking Group, and I was at JP Morgan and their small business lending, commercial banking, middle market, large corporate, private banking. So I've been around and I understand access to capital. If you're a startup, access to capital is going to look a lot different than, or less promising than if you're an active business with historical cash flows. The financial lending system is rigid for a lot of reasons, but a lot of times you're going to need 2 to 3 years historical cash flows, personal financial statements, internal financial reporting. Honestly, a lot of what you're going to look like and what you're going to need is some of the same things that you would need for your financial test and verification for a bond. So a bond does a lot of things as a lender. One, it makes a lender feel easy in the fact that you understand the reporting process and the reporting disciplines. Two, when you look at it, for anybody who's bonded, it shows their ability and the wherewithal to complete a project primarily. And so that's a good thing. So, and George can talk to you about some of the different things for some of the startups, the smaller jobs, or if you've got a joint venture. But as far as me, if he's looking at 3Cs, I'm going to look at 5Cs. I'm going to look at credit, uh, capital, cash flow, collateral. You see conditions. Conditions are big. The conditions, 2008 and COVID conditions, the operating conditions, were just negative. So we'll look at that. We'll look at your capacity, your personal capacity, and your corporate or business capacity, which for a small business is the same thing. And then character. Character and credit are two different things. Credit is a numerical score. Character is me looking at you knowing that you have a history of repaying and paying your bills. You might be late, you might be historically late, but that you've got character, you've got backbone, you've got something that you've done in the community. People know you, people can back you and vouch for you. So that's going to be important. Your smaller lending for a startup is usually going to be a credit scored environment. So if you've got a lower poor credit score, you're going to be hampered going to a traditional, to a local bank. You would probably want to go to a River City Capital or Pathway Lending, the Epicenter, and or something like that, a CDFI, which Pathway Lending is, River City Capital, they are those things. But you've got to remember that a lot of banks aren't really good at the startup process, only in the way of receiving funds in a depository function, where they set up checking accounts and they're taking your money. Startup lending is hard. It's very risky. Construction lending, construction receivable financing is hard. It always makes it easier to know that there's bonding in place. There's work in progress. There's change order evaluations. There's a lot of things that make it risky. So I think before you start off on the lending side, I think what you would need to do is actually start with George on the bonding side. And I say that because at a lot of times, once you know your bonding and what that's going to look like, you could then come to a bank and you can actually get a credit function, which will be a letter of credit, credit instrument to secure that bond. So there's a lot of different ways you could do it, a lot of different collateral you can use. There's some fintech lenders out there that allow you to use equity in your home as a line of credit to use for a bond. At TKS Capital, we did the premium financing on that, and we had a direct lending pool a couple of years ago that would actually look at secondary forms of lending, from using assets, fixed assets on your balance sheet, commercial real estate, and other things like heavy equipment. And we find liquidity in that and allow you to use that for a bond. I think when you get to the local banks, the one thing we don't have in Memphis is we do not have a strong Black bank. And I think that's impaired the growth of the Black businesses and minority businesses that are in the city and the surrounding area. The good thing is that Tri-State just merged with Liberty Bank. So that's a good thing. At SunTrust, we've got a strong community development team and community lending team, community capital team led by Dorothy Cleaves. Our regional CEO, Johnny Moore, is Black. and he's one of the leaders nationally at SunTrust. So as far as the branch banking, we've got some people who are business bankers and branch bankers who are very qualified and very capable. And we work on a team platform and team approach. So if they don't know it, they can come to me and I can, help them. If there's something that is way too small for me, I can take it to the branch, but I can still give, professional advice as a team member. I can be reached at Sean, SEAN .Norris, NORRIS at truist.com, TRUIST.com. My office number is 901-681-4119. The one thing I will say is that not every bank is for every person. You have to find out a bank that works for you. But the main thing is you're going to have to develop a relationship. And if you're going to do business with the city, the state, MLGW, Army Corps of Engineers, you're going to have to be bonded. And you should look at it as a positive. Minority business that can say that they're bonded, and to say, okay, call George Hilliard. He has everything. Everyone here knows George, every bank. So everyone who's on the top 20 minority businesses work with George. So get to really know him and get to know me. But I'm just saying that, the bonding, a lot of people think, we shouldn't be bonded. We don't need to be bonded. It's a great thing. It's a wonderful thing. I think, and it should be embraced that way. It forces you to do a lot of things as a small business that you need to do. And if you have a strong bonding history, it says a lot.
Thank you so much. We had one question before we leave out, Mr. George. Is the bonding company, or are you bonding specific projects such as the large renewable project here? Are you available to bond companies that are bidding? I think is what the question is.
Yes. I don't know exactly, how I need to respond, but I will respond. Yeah, we are in a position to, whether you already own a project or not, but if you own a project, I suggest that you stay with your bonding people unless you have run into a situation, because each project has a bond. So your bonding is not like it covers everything. Every time you enter into a project, there's a bond specific for that. So I tell people, if you already own the project, stay with that bonding company unless you run into some major issues. Before is RFPs, RFQs, if you realize that you're going to respond, I would suggest you get in touch with me right away, and we do somewhat of an evaluation to see where you are, in where you may be from a bonding capacity. And as Sean just said, it's not something that you do overnight, but it's a process that you go through. And it all depends on where you are credit-wise and how you structure. But the answer to the question, yes. And if it's a project already in place, you already have a bond, I would suggest that you stay with that bonding company, because if you decide to leave in the middle of a project, that could really be a major problem.
Okay. Thank you all.
I hope that.
Yes, I think that was helpful. Thank you all so much. What I will do, we will follow up with our participants today. We will give them your contact information to reach you if they have future questions or concerns about bonding and financing for their companies. But we are so grateful that you all were here today.
Tamara, can I add something?
Yes, sir.
Yeah, real quick. A lot of times, and just be aware that some of the major prime contractors, the majority prime contractors who, and the majority being white, when they say to you, hey, listen, you sub this job and we'll have you up under our bond, just be careful on what that looks like. So they might get the work with you as a participant, and you can be unbonded, sure, and they can register you and report you as part of their 25% of their 20%. But they are bonded. And if there's any type of change orders, that are very discretionary, one, two, they can move you off the project and bring their
Absolutely.
own guys in. And
Mhm.
so when you're bonded and on that project, it changes the whole relationship, and how you're interacting, with the prime, how those inspections are, because your bonding agent, that insurer, they're not going to have you moved off a job if you've done the work. If you've done the work, because that just changes everything. And so, like I said, sit down with your insurance agent, George, and kind of go through his evaluation. His evaluation kind of is really going to be how we start off the evaluation and looking at you, and in the sense that, because that leads into the credit risk of it. The initial risk is going to be the bond. How that's been evaluated is going to be the same way that we evaluated. Once we come in, and if there's construction receivable financing, there's only a few that do that. TKS did it. We did that for a long time. And there's two others that do it. And it's a tricky business when you take out the bonding piece to it, because the risk changes. Because if there are change orders, and there are contractors, primes here in the Memphis market, that are notorious for change orders and then pulling minority subs off, so, and that leaves you in a lurch. It leaves you in a lurch with somebody like me, who wants to get repaid. So thank you, Cameron.
So you definitely suggest, just to wrap up, if you are interested in a project as a sub, even if you're with a prime that has bonding, you suggest that sub has their own bonding for that project.
Yeah, I think you need to have that
Absolutely.
discussion. I think
Yeah.
you need to have the discussion with George and be able to show that capacity. If you're bonded, it's going to lower his premiums.
Absolutely.
So his bonding premiums are only going to go up for unbonded contractors. So it only makes sense for him to have bonded subs on the project. But what it does is it takes, when you fall up under his bond, he has control. He has control. So if he's what's at risk, he can always say, well, I'm at risk. Well, I'm at risk for not completing the project. Then he can move you and bring you in. And in his MBE compliance, he can say, hey, I met my goals. I met the test. I did everything. This person couldn't do the work. I could get him off, So once you fall under a prime who is bonded, and you were unable to complete the job, and you were part of the initial proposal for work, your name is out there for not being able to complete a job, for having too many change orders. And we'll call the prime and say, hey, why did this person get pulled off? Well, they couldn't complete the work. Well, when did you know that? The change order came, depending on the trade, when the change orders came. But it's a tricky business, and it's better to be self-sufficient, showing your bonding capacity and the ability to post bond. So
Totally
just have that conversation, and I'll have the conversation with George, and I'll let him know who are the primes that do it. I mean, if you've been around Memphis and you've been working, the primes that will kick you off a job, or they will say, hey, I'll keep you on, but my people are going to do the work, and that's a notorious or something more nefarious that they do, so they put you over the barrel and say, hey, we won't pay you because of these change orders, but we will pay you X, Y, and Z if you bring in these people. Okay. So you'll pay and get this fee, and they'll get this, and we'll pay them directly, so the bonding allows you to keep control of your finances and how you get paid. You complain to your bonding agent or your bonding company or insured that you're not getting paid direct. They're gonna want to know why. They've got attorneys. They'll fight that fight for you. So yeah, just wanted to just put that out there for you guys to think about and digest, and the need, like I said, to call someone like George.
Thank you so much. We appreciate it, and we'll definitely give them include your information in our wrap up when we follow up with all of our participants. Thank you all so much for joining us today. Following this panel discussion, we have our breakout rooms. We want you to meet our user areas here at MLGW. Once you return to the dashboard of your platform, you will have options available. Just click on the breakout room icon and it'll take you to the different rooms available. You click on each room that you're interested in hearing from our user areas here at MLGW to share what's needed, what's required, what are they looking for in subcontractors and prime contractors to complete the work. So please log off of the Zoom and go straight into the breakout rooms here on the dashboard of the platform. Thank you again for joining our 2021 Proactive Procurement Fair at MLGW as we level the playing field. Thank you, Mr. Norris and Mr. Hilliard, for joining us. You all have a great day. Join us in our Zoom.
Bye-bye.
Thank you. Bye-bye.
Our final Power Playbook allows you an opportunity to network directly with MLGW staff as well as other business owners and learn a little more about any contract opportunities with MLGW. Just return to the virtual platform and click the Power Playbook 3 Breakout Rooms button. This will give you access to the direct links for each of the breakout sessions you wish to join. Breakouts are available for information technology and information services, facilities and maintenance, water engineering, line clearance, construction, right-of-way mowing, and transmission and gas lines. Thank you again for joining today's procurement fair and enjoy our final Power Playbook in 3, 2, 1.